I now hand the conference over to Mr. Harit. Thank you, and over to you, sir.
Good morning, everyone. On behalf of Spark Capital, I'd like to welcome you all to this call to discuss Aster DM Healthcare's Q2FY21 results. We have with us today from the management team of Aster DM Healthcare, Dr. Azad Moopen, Chairman and Managing Director, Ms. Alisha Moopen, Deputy Managing Director, Mr. Srinath Reddy, Group Chief Financial Officer, Dr. Harish Pillai, CEO, Aster India. I'll now hand the call over to Dr. Moopen for his opening remarks. Over to you, sir.
Has ever witnessed in our lifetime is still continuing across the world. Most countries have lifted their lockdown restrictions and people are adjusting to the new normal despite the challenges. In GCC, where we have significant operations, there is a second wave reported in some of the countries with lesser severity, and authorities are adopting ways to avoid lockdowns and to allow life as normal as possible. Our businesses have come back to normal in the GCC. However, India operations are still lagging behind, even though the new cases in India have dropped in the last month. As we go through this journey, some of the key learnings that have taken a permanent birth in our strategy formulation process are taking care of the frontline soldiers, reducing mortality and morbidity, sustainability of the revenue streams, focus on cost control, and maintaining robust liquidity in the system. I would also like to share here that cost optimization projects which were initiated in the past two fiscals with intention to drive in more cost efficiencies at the level of manpower, material, and other direct expenses have helped us to become more robust. After significant impacts in the month of April and May, our business had witnessed a gradual recovery since June in the GCC, which then continued in the second quarter. During the second quarter, we posted a revenue of rupees 2,268 crores, which is an increase of 29% when compared to previous quarter and an increase of 9% compared with the same period last financial year. I believe that the innate strength in our diversified business model has helped us maintain the business amidst the pandemic situation. The EBITDA in quarter 2 was 271 crores, a significant increase of 90% when compared to previous quarter, and an increase of 11% compared with the same period last financial year. The profit after tax of Q2 was 33 crores, also a significant increase from a loss of 83 crores when compared to previous quarter, and an increase from a profit of rupees 3 crores compared with the same period last financial year. One point that I would like to highlight here is the seasonality nature of our business in the GCC region. Seasonality variation has consistently been visible over several years, where in the summer months the business tends to be muted due to vast exodus of residents on vacation. But this year was an exception due to present pandemic situation and restriction on travel. The reduced outward movement of the expats has somewhat helped us to maintain the business this year during this first 6 months of the financial year. Another positive point is the pent-up demand due to restrictions on elective surgeries and limited footfall during the first quarter, which has helped us to achieve significant revenue growth during the second quarter. Our Group CFO, Srinath Reddy, will take you through the details of the financial performance for the quarter 2 and H1 of the financial year. As we are slowly progressing towards normalcy, the funds for the capex which we had initially kept on hold is now being cautiously released for completion of existing projects in order to aid future growth. Projects which are in advanced stages of completion, such as the Aster Hospital in Sharjah, first phase of the Whitefield Hospital in Bangalore, and expansion plans of Kolhapur are on priority list to complete at the earliest. We are also continuously servicing our existing debt while maintaining liquidity. Some of our new initiatives such as Aster Labs in India, Telehealth, and Aster Home have been seeing increasing business volume month by month. Aster Labs an NABL accredited lab with ICMR approval to conduct RT-PCR testing for COVID-19 has so far conducted more than 26,500 COVID tests, including government and private hospital samples. Along with molecular biology testing, our lab infrastructure is also equipped to conduct testing in other areas such as biochemistry, histopathology, microbiology, hematology, etc. With the help of tele and digital communication, we have managed to scale up our telehealth services to deliver and facilitate health and health-related services. We have received the FICCI Healthcare Excellence Award for the year 2020 in the category of Excellence in Telemedicine and Digital Health for various telemedicine initiatives during the COVID times. Another important area where we are focusing to provide service and additional revenue stream is the Aster at Home, the home care division. It is already very active in Kerala and in Bangalore. We have been actively involved in various activities for testing, quarantining, and treatment of COVID patients across geographies we operate, helping large number of patients who did not have access to quality healthcare. We are also able to provide expert medical care to the victims of the Air India Express flight accident on 7th August 2020 at Calicut Airport through our Aster MIMS hospital at Calicut, which handled the largest number of patients. I now request the Group CFO to walk you through the financial numbers. Thank you. Over to you, Srinath.
Thank you, Doctor. Good morning, everyone. The pandemic is continuing to create new waves in many countries with record number of cases around the world. But people are resilient enough as we have now adjusted to the new normal. As Doctor mentioned, we are witnessing positive trend in our numbers from the month of June onwards, which can be seen in our Q2 numbers. Now let me share the financial numbers for Q2FY21. We have registered revenue from operations of rupees 2,268 crore, which is 9% growth on year-on-year basis, and corresponding constant currency growth is 4%. In Q2FY21, we have reported EBITDA of rupees 271 crore, which is 11% increase on year-on-year basis, and corresponding constant currency growth is 6%. EBITDA margin in Q2FY21 was 12% as against 11.7% in Q2FY20, a reduction of around 30 basis points. PAT, which is post NCI, increased to rupees 33 crore as compared to rupees 3 crore in Q2FY20. Coming to 6 months performance, revenue from operations for FY21 H1 decreased by 2% to rupees 4,028 crore from rupees 4,115 crore. EBITDA excluding other income decreased by 12% from rupees 469 crore in financial year 20 H1 to rupees 414 crore in FY21 H1. PAT decreased from rupees 6 crore to a loss of 50 crore in FY21 H1. The constant currency reduction for revenue and EBITDA stood at 7% and 17% respectively. Regarding the segmental performance, the revenue in GCC hospitals increased by 20% on year-on-year basis to rupees 857 crore in Q2 FY21. EBITDA increased by 23% on year-on-year to rupees 127 crore in Q2 FY21. The EBITDA margin increased from 14.5% in Q2 FY20 to 14.8% in Q2 FY21. Revenue in GCC clinics is at rupees 538 crore in Q2 FY21 compared to rupees 459 crore in Q2 FY20. EBITDA was at rupees 66 crore in Q2 FY21 compared to rupees 66 crore in Q2 FY20. The EBITDA margin dropped to 12.3% compared to 14.4% in the previous financial year. For pharmacies in GCC, revenue is at rupees 537 crore in Q2 FY21 compared to rupees 544 crore in Q2 FY20. EBITDA has increased from rupees 58 crore in Q2 FY20 to rupees 64 crore in Q2 FY21. And the EBITDA margin is at 11.8% in Q2 FY21 compared to 10.7% in Q2 FY20. Coming to the balance sheet, the group's net debt stands at rupees 2,476 crore as at 30th September 2020 compared to rupees 2,783 crore as at 31st March 2020. which is a reduction of 307 crores. The breakup of net debt. India stands at rupees 353 crores compared to rupees 358 crores as at 31st March 2020. And the GCC net debt stands at US dollars 288 million compared to US dollars 324 million as at 31st March 2020. Our focus shall continue on reduction of debt and cost optimization. On that note, I conclude my opening remarks. We would be happy to give you our perspective on any questions that you may have. I would request the operator on this call to open the Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, good morning, and thank you for taking my question. The first one is on the second quarter performance at the GCC hospitals. I'm looking at the constant currency growth of about 14%, so pretty good, kind of a run rate. So that's just wanted to understand how much of it is contribution from COVID-related revenues. That is one. And the second question on that one is, what's the outlook for the second half of the year?
Yeah, Alicia, you would like to take that question, Alicia?
Sure, Chairman. Hi, Shyam. Yeah, so actually in the second quarter in GCC, we did not have a lot of COVID-related income, at least in the IP. It was only in clinics we had the PCR testing income that came. So it was actually a lot of the pent-up surgeries which were delayed for the second quarter that came in. Like Chairman mentioned earlier, usually there's a seasonality and people go away during summer, so GCC sees a dip. But because we didn't really have a lot of people traveling out, there's a little bit of element of, the population being higher as well. In terms of the remaining part of the year, we're hoping and hopeful that we will have a consistent performance compared to last year. I guess that depends on how the COVID also plays out. So far, we're not seeing any indications of lockdowns, even as numbers slowly are rising. It seems to be fairly within control. So we hope we will at least be able to remain at last year's levels for the remaining part of the year.
Got it.
Hope that clarifies, Shyam.
Yeah. Thank you so much, Alicia. So I think second question is on the GCC pharmacies. This has been, we have seen a decline in revenue and, EBITDA has been kind of held flattish. So I'm just trying to understand what's happening here. Are we still seeing hesitancy to come into the pharmacies? What's driving the second quarter weakness?
So I think, to some extent, there's been a footfall drop that we're seeing in the retail side. So a little bit on the clinics and a little bit that flows through to the pharmacy as well. So naturally, there has been some population decrease that has happened since COVID. So we're hoping that gets restored over the next few months. So it's been almost an impact of that in the second quarter that we have been watching. But again, we expect that to get restored over the next few months and going back to pre-COVID levels. Hopefully, the year will close like that. But it hasn't been specifically because people are not coming back into pharmacies anymore. That behavior has come back.
All right. Last question is on the India hospital piece. We have seen actually, wanted to know just the thoughts on, Kerala business, especially we are seeing some kind of a slight increase in the cases there. So just want to understand what's the occupancy, and I was also looking at the slide on, occupancy for 0 to 3 years. Looks like now Indian hospitals, now the newer ones have higher occupancy than the more mature ones. So would that be reflective of the Kerala piece? So that's the second question. Thank you.
Dr. Harish?
Yeah, so thank you for that question, Shyam. So when we look at the pan-India trends of COVID, Kerala was the last state to have a surge in COVID numbers. And in fact, when we looked at the outliers, the COVID numbers started increasing in Kerala hospitals only onwards. So overall, when we looked at it, the big challenge was in other parts of India and not in Kerala. The second part of your question, when you talk about ramp-up hospitals, is basically Aster Kannur, which had a very high occupancy because of its geographical locations, and there was a pent-up demand in that market, and that is the reason why it's really an outlier in terms of performance and occupancy levels. So that is why when we combine the two hospitals, Aster Kannur and Aster RV in Bangalore, the occupancy level 5% compared to the rest of India hospitals, which is at 49%.
Thank you, Dr. Harish. All the best.
Thank you. The next question is from the line of Anmol from JM Financial. Please go ahead.
Yeah, hi, thanks. So my question is around first the GCC hospitals. If I understand Alicia correctly, a big contributor of this quarter has been the fact that expats haven't gone back, and second, a lot of pent-up demand is spilled over to this, and therefore without COVID contribution, the performance in GCC hospitals is held up rather well. Is there also a third factor, like, for example, your strengthening competitive position given what's been happening with some of the competition? So, when we look at the GCC hospital as a revenue driver for the next year, should we also, outside of these disruptions, which should sort themselves out in a couple of quarters, look at some of the structural market share gain drivers, etc., also as we build our numbers?
Yeah, thank you. Thank you for that question. So yes, we do believe that with what's happened with some of the competition, and even just with COVID, I think Aster has sort of gained pretty much market pole position in our key market, which is Dubai, right? So we do believe there is an attraction both for doctors as well as for patients to the brand, which we are also experiencing. So that would hopefully be something which we will be able to maintain and continue. So I do hope that that's also a third factor which will enable us to kind of maintain that position.
Okay, and my second question is around India hospitals. So GCC didn't have a lot of COVID contribution, but if you look at India and you were to kind of, look at the COVID caseload as a performance contributor, would you be able to give any granularity in terms of, what happened there to cause such strong sequential growth, and how should we look at it from a 2H perspective?
So when it comes to India hospitals, quarter one, we didn't have any cases, and the business impact was primarily because of in the geographies where we operate. The surge in COVID numbers started coming in quarter two. So when we look at quarter two, overall composition of the revenue, it's just about 15%, and that's primarily it reflects to my comment earlier that from the India vertical piece, we have roughly about 56% of our revenue contributed by the Kerala cluster, which had almost negligible impact. The COVID numbers in Kerala started coming only in September. So hence, when we look at cumulatively at quarter two, the COVID revenue composition of the performance of top line of 414.8 CR in Q2 is about 15%.
Right. So just to dwell a bit further on that, so basically if you look at say around 60 crores out of 415 crores, we are looking at a number close to 355 crores, which would still be a decline from where we were last year. So haven't we yet seen a lot of pent-up demand drivers like we saw in the GCC hospitals surface, or that is something which we should see more in Q3?
Yeah. So when we looked at overall, when we compare from year on year onwards, like Q1, we had a 19% dip in our revenue performance compared to last fiscal, but we had brought it down from 19% to just 4% in Q2. So absolutely, you're right. There has been a catch-up of pent-up demand in across the clusters, and the impact has been in Q2. We are very positive about it, and the same trend is likely to continue in Q3. We are just keeping our fingers crossed because of the central government announcements that there might be some sort of COVID resurgence around the festivals, like next week is Diwali. So we're just being cautiously optimistic where that is concerned.
Thank you. That's it from my side. Congratulations for a good quarter.
Thank you.
The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on good numbers. My question is on the clinics business. So clearly in the past, and it remains the funnel for the operating growth for hospitals. And we have seen after a big dip in Q1, we have seen significant recovery, both Q-on-Q and YOY. You did mention about PPE and all those things, but the underlying volume, has that also improved, the non-COVID piece in the clinic business per se? And would the margin jump is also due to PPE?
Yeah. Alisha, you would like to answer that?
Yeah, thanks, Prakash. So when it comes to the clinics, we are seeing, as I mentioned with the pharmacies, also a little bit dip on the numbers. So what we're trying to do is, there are two aspects. So one thing, as Chairman had mentioned, that there is a push for digital and online consults and sort of just changing the business model a bit that we are actively working on. We have been doing, in the last sort of 6 months, we've done around 90,000 teleconsultations as well. The other part is being a funnel. We have restructured again the clinics. We have attached it back to the hospital because we do believe that there is a lot of synergies in terms of sharing doctors and having and sharing those costs across that system where we have almost 700, 800 doctors just within Aster hospitals and clinics, which is our largest piece. So that's the positive that we are expecting will come in the next few months. In terms of the cost, the PPE has created some margin pressure because our costs have gone up by a couple of percentage points. We are offsetting it, or more than offsetting it, with the focus on manpower. Because at the end of the day, we had over 50% in manpower costs. So what we've been doing is being as mindful and as resource optimize the manpower as much as possible. And we're seeing those benefits, and that's where the margin expansion is coming from.
Yeah, thanks. And second question on the GCC hospitals. So we have seen first half 10% growth. What I'm trying to understand is what would be the like-to-like growth? As I understand, there was some acquisition last calendar year end, and also the currency benefit would have helped. So on a like-to-like basis, how would the business have performed on the hospital side?
Yeah, let me come in here. Here.
Okay, go ahead.
Yeah. So on a like-to-like, you can see the only business that's been added during the period which is not reflective in the last year same period is the Vahat. That is the home care. So which is contributing per quarter around 34 crores. So that is the one which is getting added to the hospital business, and this has also got fairly good margins. So that is on the Vahat part of it, home care. And on the constant currency growth, in terms of half year, the hospital revenue growth is 3% and the EBITDA growth is 2%.
Okay, sir. Thank you so much and all the best.
Thank you. The next question is from the line of Santosh from HSBC. Please go ahead.
Thanks for taking my question. I have two. First one is, can you give us some idea about how each of the insurance classes performed in the UAE? Was it mostly driven by the higher end or the middle or the lower end insurance class, the growth?
I didn't clearly hear that question. Can you just repeat, please?
The question was, in the UAE, which insurance class was performing better? Was it the higher end insurance class or the lower end insurance class in the UAE hospitals?
Yeah, so I'll take this. So if you look at in the hospitals, you'll see the jump in the RPOP as well. Actually, what has happened is that the higher end segment, that is Medcare, has performed better compared to Aster in Q2, and that is reflective in the RPOP as well. The RPOP has gone up from 165,000. Yeah.
Yeah, no, I was just trying to say that when you, as a sector, when you look at the lower end of the market where we have the access clinics and all, the people have moved out more. Whereas the higher end of the market, which is in Medcare and actually the mid segment, in those areas the movement has been less, especially in Medcare. So there are two things. One is the insurance as well as the people's presence in the country. Two aspects are there. So naturally, when there are more people here who are from the upper bracket, there will be more of those insurance coming into the picture. So it is more connected with the people who are here rather than specifically the insurance.
Just to add to that, Santosh, I think one of the trends we are predicting is that earlier when Dubai implemented the mandatory insurance, a lot of the companies would get the lower end of the insurance policies just because they were maintaining costs. But now since COVID, I think a lot more attention by employers and employees on the policy that they have is also there. So we're hoping there will be some correction in terms of the policies in the middle segment and the lower segment, which will also kind of increase the health premium in the market.
Thank you. This is very helpful. Second question is regarding your clinics. So what I see is that you had very strong revenue growth in Q2, but the patient count has actually dropped. So does that mean that you were earlier planning a strategy through which you wanted to improve the mix of patients in your clinics? So is that working right now? Is that the driver for this change?
Yeah, so there is a drop in the footfalls in clinics. But however, what has helped us is the PCR test, so which has contributed to the revenue increase. But however, there's a drop in the EBITDA. That is because the costs have gone up mainly in terms of PPE kits and sanitization and other costs. So that is the reason. So I think there's a lot of initiatives being taken on the clinic side, which should get reflected in Q3, where we are trying to control some of these costs. Alisha, would like to add to that?
Yeah, I think, as I mentioned, the biggest cost for us is the manpower. So whilst we will see some pressure on normal revenue for some time till the population recovery happens, we will be able to hopefully offset it with COVID revenue, which is good because it has fairly high margin. And on top of it, as we are controlling the manpower cost, I believe our margins should recover nicely for the third quarter and for Q4 as well.
Thank you. That's all from my side.
Thank you. The next question is from the line of Sharan Pillai from Allegro Capital Advisors. Please go ahead.
Hi, good morning. Thank you so much for the opportunity. Most of my questions have been answered. I just had one question with relation to sort of your medium to long-term expansion plans that you could possibly have into other geographies. Is there anything that we're looking into or working on at the moment?
Yeah, we are looking at opportunities in other markets, but because of the COVID pandemic, it has been slightly doused, but still we are looking at opportunities in other markets other than GCC and India. But there is nothing concrete which we can announce now, but we are exploring the opportunities because we would like to have look at other areas where there is potential.
Could you by any chance allude to which markets you're possibly looking at? The reason I'm asking is the reason I'm asking is because there was an article that had come out talking about Aster being in talks to open up a hospital in the Cayman Islands. So I wanted to know whether that was something that was in the books and why specifically you were possibly looking at the Cayman Islands.
Yeah. So we are just like what I said, we are looking at, not only Cayman, but other markets also. But as soon as there is something concrete, we'll be announcing that.
Okay, fine. Thank you so much.
Thank you. The next question is from the line of Harit. Please go ahead.
Hi. Good morning, everyone. So my first question is on the GCC clinics business, and you mentioned that RT-PCR testing has contributed to the revenues in this quarter. So how are the RT-PCR volumes trending in October and November? Has there been a decline from the second quarter levels? Is my first question. And if you could quantify how much is the contribution from RT-PCR testing in the clinics segment revenues, that will be helpful.
Yeah. So that will separately give offline, Dr. Harit, on that. But however, the numbers continue. The PCR testing still continues. As you are aware that the number of cases are also going up, and also with traveling now being eased out, so therefore the testing is also increasing, where people need to do the testing to travel. But having said that, there is also competition. Many of them have come up with the PCR testing. In terms of PCR testing for the quarter, that we can give you separately offline.
Okay.
So Harit, just to add to that, I think what's also happened is that a lot more people are testing. I mean, if they are going places, they want to test. I mean, even outside of travel, just there's that culture of more testing which is happening. But yeah, we'll share the information in terms of the ratio of PCR revenue and stuff offline.
Yeah. So my second question is on the pharmacy segment. You talked about some non-performing stores being closed down during the quarter. So is there more rationalization of the network that's going to happen, or are we done with this current round?
Yeah. So see, we have been looking at the ways in which we can improve our efficiency, which is done through various ways, and one of that is the closing down of the pharmacies which we are not doing that. But as it stands now, it is done, and I think we have now most of our pharmacies which are going into a profitable state, and there is not anything in pipeline to be closed down. So it is done for the present, and we don't actually go forward. We won't be able to say, but as it stands, there is no closure, nothing happening in the near future.
Thank you. That's all from my side.
Thank you. We would like to remind participants that you may press star 1 to ask a question. Reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. The next question is from the line of Agraj Shah from Tata AI Life Insurance Company. Please go ahead.
Thanks for taking my question and congratulations on a good set of numbers. So my first question is on the other expenses. It has gone up 30% year on year. So what's the reason for that?
Yeah. So these other expenses are, on the lab expenses, there are significant expenses on the lab side. That is one. And two, also is that in the normal course of business, we take certain provisions. So the provisions what we are taking in the current quarter has gone up. So that explains for the other expenses increase.
And this lab-related expenses would be recurring in nature, or it's more of a one-off charge?
Sorry, could you repeat that question, please?
So the lab-related expense in the other expenses, would it be a one-off, or it will be a recurring in nature going forward?
Yeah. So the thing is that we also got the sanitization and other expenses, right? This housekeeping expenses, which has gone up significantly more. So that is what I meant. So the sanitization expenses are gone, which is sitting in the other expenses. So that is where that will continue. I think could continue, but we are trying to see as to how we reduce the cost in quarter 3 and quarter 4. So slowly it should drop. But having said that, these expenses could continue. But in terms of the provisions and other things, that is something which is in the normal course that will get reduced. So therefore, you will not see that kind of an increase going forward in quarter 3 and quarter 4.
Okay. My second question is on this expansion plans that you're talking about. So would you have a preference for going for the inorganic route, or you will be looking for greenfield expansion, these other geographies?
Yeah, so we have actually shown some of these projects which we have taken up, which I mentioned in this, in my the initial speech also. So these are all the ones which were in pipeline, which we had put on hold. Some of those we have now started because it was already towards the end of construction. We had put it on hold. Now we have restarted the construction, and it is likely to be get inaugurated. But these are all organic. Inorganic, presently we are not looking. Not that we won't be looking at, but at present there is nothing in pipeline which we are looking at. Immediately to go into an inorganic expansion.
So I was thinking that because assets are now available at distressed rates across countries, I guess, so wouldn't inorganic make more sense, given that it's faster cash flow generating and might be better off in terms of capital allocation?
Yeah. No, this is something which we definitely have in mind, but we don't want to increase our debt position by, we have reduced our debt position. We don't want to have more debt and go into a situation where there is more of debt. So we are looking at opportunities, and if there is any opportunity which comes in where there is not too much of a capex requirement, we will definitely look at that. So answering your question, yes, there are opportunities. It's a good time to buy. But at the same time, we don't want to go too much into debt and again have a strain on our liquidity.
Okay, thanks a lot. That's it from us.
Thank you. The next question is from the line of Harit. Please go ahead.
Hi. Thanks for taking my questions again. I just wanted to understand how the home care business is performing. Has there been a positive trend in that business in the current environment? Is there a greater demand for home care in this situation? And just trying to understand if the revenue trends have changed materially from the time of our acquisition last year.
Yeah. Srinath, you would like to about Vahat, and then of course the organic growth of the business in India, what Harish can say.
Yeah, over here, see, in the GCC, as you are aware, we have entered into home care business, which is Vahat. So that has been doing fairly well. So we are looking at expanding the home care business, so that is there on our radar, and because that is something which we feel is attractive, and going forward, preference to be treated at home will also be higher. So therefore, that is something which we are looking at, and we will continue exploring those opportunities in the GCC. Dr. Harish, in India, you can take that up.
Yeah. So, Harit, in India, we are currently present in 8 locations. We have found a substantial uptake for home care from Q1 onwards. And this is also growing because of our ecosystem, what we are building. There is a push for a digital interface, and the primary focus is continuum of care post-discharge of our patients. So we are pretty bullish about home care. In terms of, if you look at geographical spread right now, the Kerala market, especially North Kerala, there is a big upsurge in home care demand. Clusters also picking up, and others are also showing a positive trend. So overall, this year has been quite good for home care in India.
Harit, just to add to that, so even in GCC, other than Wahat acquisition, we've seen our existing business also do, sort of being able to push actively the home care. So we are seeing that organic growth, which is great because we anyways have our captive audience and our patients and the brands. So we have been seeing, like Srinath mentioned, there is a preference for home care. There is a preference for even just blood testing at home, for nursing at home. So those are lines which are getting added on to the existing businesses as well. The one issue we are facing right now is there is a shortage of nurses in the market because a lot of nurses come from Philippines and those borders are closed. So we do believe that if we are able to kind of expand that the nursing care numbers, and we should be able to kind of fast track that home care business here as well nicely.
Okay, thanks for that. And the last question from my side is on the India hospitals business. As you had mentioned, there's been an uptick in the number of cases in Kerala, which is your largest market. So when we think of the third quarter, will there be an impact, and how should we think of the India hospital segment in the third quarter based on the trends that you're seeing in October and so far in November?
So Harit, the good aspect is that the hospitals, what we have, I mean, our entire network of hospitals are NABH accredited, and we have large capacity sitting in Kerala. The way these hospitals have been designed, there is strict zonalization which has already taken place. So we are comfortably able to manage both COVID and non-COVID patient volumes. And like I mentioned before, there has been a quarter-to-quarter growth in the non-COVID numbers, which is still sustaining itself. So we don't find that any sort of a challenge. If at all, we will find that the numbers hopefully should be better.
Okay. Thank you.
So, Harit, answering your earlier question, I just wanted to add on. So, we have now this benefit of having this home care along with the laboratory service which we have started, and we are now in the process of rolling over in the geographies where we operate. And along with that, the telehealth. Tying this up together, both in India as well as in GCC, we hope that we can create an ecosystem where we can provide people omni-channel, and also through that as a funnel attract patients into the hospital. So that is the whole idea of starting this home care as well as lab and along with telehealth, and tying those up with the hospitals will be the best thing which people can have. As well as for us also, that will create a differentiator when compared to many other standalone players who run labs or who do just home care or who do just telehealth. So we think that we could go into a stage where there could be an omni-channel situation where this can put together and could create an ecosystem.
All right. Thank you, Doctor.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Harit for closing comments.
Thank you all for joining this call. I thank the Aster DM Healthcare Management for the opportunity to host them. Have a good day.
Thank you. Thank you, Harit.
Thank you. On behalf of
Spark
Capital Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.
Thank you.